Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'm up 20% in my Forex gains in 4 months so far this year, but it should have been more. I've had a couple of conversations with folks that send me emails. Thank you very much. A lot of them are asking me, what can I make? What can I make? How much money gets my returns can I make? I see these guys making 200% a year, 300% a year, or 50% a year. What's going on? The problem here is who you're listening to. If you're trading at 200 to 1 and you get lucky, yes, you could take a $10,000 account, trade 20 or 30 lots against that, 40 lots against that at 500 to 1, and I mean that's $400 a pip, right? $500 a pip. How many pips does it take? 10 pips is $5,000. I mean, how many times can you get lucky, I guess, doing that and survive? The mathematicians have a thing called risk of ruin. You look at the probabilities of events of a certain scenario, and at some point there's, I'm going to win 100% or whatever, 10 million percent, and on the other side is I'm going to lose it all. That's the risk of ruin. So what is the probability of risk of ruin? There's a probability of risk of ruin in everything that we do. If you get into your car and you drive down to the grocery store to pick up a can of pork and beans, there's a risk that you're going to get killed, a risk of ruin. Is that risk very high? Well, if you're on a skateboard and you're on the highway or something, or a little, crappy car, risk of ruin becomes higher than it would be if you were in an armored truck. Okay? So if you're trading, I listen to these guys, and I don't consider them traders. They're lucky traders, trading at 200 and 500 to 1 leverage, and they're able to put these big numbers up and profits. God love them that they make all that money. That's not your problem. They are lucky. They got skilled early on in their trading by losing all their money many times before they figured out what they should be doing, and now they just jack up the fire and they cook it faster. They're not doing anything that you can't do, except they've got more money to lose behind them, so when they get it wrong, they can come back from that. I mean, if you take a $10,000 or $20,000 account or a $40,000 account and run that up to 6-7 figures by compounding and 500 to 1, and then you're sitting there with a $400,000 account or a $4 million account or whatever it is, and then you take a couple of $100,000 and you jack that around and you lose it. Well, that's a lot of money to you and me maybe, but maybe not to them. It's a big hit, but the next time they trade, they take that $200,000 and they run that to 6. So why think that you can do that? Why would you go into a highly probabilistic risk of ruin proposition, trading a $1,000 account, thinking you're going to take that to $30,000? You're going to do all the stuff that they're doing. You're going to be pushing the lever all the way to the thing, and then you're going to lose your money, but you can't come back because you can't refund that $1,000 account because $1,000 is a lot of money to you, or $10,000. You can't come back from that. I watched all these videos back and started studying the currency markets in 2007 and started actually trading them in 2012. I was just doing them, studying them as an academic exercise prior to 2012. I lost a couple of mini accounts of $2,000 and traded that, and that went away. And I'm thinking, well, I'll read a little bit more, and tried another $2,000 account, and that went away. And I thought, well, I need more education. So all I did was study the markets and run computer simulations for the next 4 years. Studying the same education, got back into the market with a $45,000 account and lost $40,000 of that in about 4 or 5 months. And I thought, what the heck is going on here? I'm not stupid. I stepped back from it. I used my education from my software engineering career of 33 years figured out what I was doing wrong and why it was wrong. It was based on the education that I had consumed. I threw all that away, took my remaining $5,000 and doubled that in 4.5 months. So you can take small sums like that and you can double them. That's not the point. I'm just talking about doubling a $5,000 account to $10,000, because would I be able to take a $100,000 account and double that to $500,000, $800,000 in 4.5 months? Probably not. No. I wouldn't even think of it. The risk of ruin goes up dramatically when the dollar value changes and the number of lots that you're trading change. If you don't understand the dynamics of that, then you really shouldn't be trading, because you're going to be taking these small accounts and trying to run them into big money. And that's crazy. You want to go into real estate. I was in real estate for 40 years. You want to take a small amount of money and run that to $4 or $5 million? You're not going to be able to do that. If you want to buy a piece of real estate as an investor, you need 30% down. If they smile at you, maybe 20%, and you can leverage. Or if you can get some fool to take back financing, you get 100% financing on it. When the 3 of the tenants don't pay their rent, you don't have the money to pay the mortgage and you're gone. I saw so many people flatline like that in real estate. And it's the same thing in currency trading. You listen to all these guys that are doing what they're doing and they're teaching what they're doing to you. They're like the guy that ran through the minefield and he got through and he turns around and says, oh, I know how to get through a minefield. And he tells you all to come and you all get your asses blown up and you don't wonder why. Because he didn't really know how to get through a minefield and he doesn't really know how to trade. So with that into perspective, these folks are asking me, what's reasonable to get in your Forex trading? In the world of education on videos and things, I can't say, I'll get you 20% a year, I'll get you 50% a year, because I can't. I don't know what you're capable of doing. So I'm not going to tell you what you're capable of doing. I don't know. All I can do is tell you that if you follow your rules, then things work out. Well, what's working out? If you could make 20% a year against your money in any investment vehicle, which you can't, but other than real estate, or if you were flipping cars, you're turning them through, you get 20% on your money, or flipping houses or something like that. But that's trading, so you should be able to get 20% a year trading, I would think. You want to put your money in a Vanguard index fund over the next 25 years or so, you'll average out 8%. Tomorrow you might see a yearly average of negative 2%. And then the year after that, it might be 12%. But over a 25-year period of time, you'll get 8%. If you're 50 years old, you don't have 20 years to get that to grow. And you don't have enough money to put it in there that if it grew, it would be significant anyway. Oh, I'm going to take my $10,000, put in a Vanguard index fund, and in 20 years I'm going to have $300,000. No, I don't think so. However, if you're 20 years old or 23 years old and you put $25 a week into a Vanguard index fund, and in 30 years you might have $600,000 or $700,000. So talking about gains in things is first a mathematical issue. If you can show a mathematical way to get there other than doubling your bet every time you go through to make up for that loss, there's crazy schemes that can show mathematically how you can make a gazillion dollars. Yes, some fool on a video, he should be shot. This was several years ago, was saying all you have to do is make 2% a week, or I think it was 2% on your money a week, and you'll make $1 million. I think it was $1.1 million in 18 months. Well, yeah, if you take 2% and you compound that against the gross as you go through, that's very possible. Except It's very easy to make 2% against $3,000, $5,000, $10,000. You make 2% against that very easily. But when you have $100,000, how are you going to make 2%? Where's the leverage? How are you going to do that? Every week without losing. How do you do that? You don't, because at some point you'll be putting $200,000 or $300,000 at risk trying to get that 2%, and you'll lose $100,000. So if you lost 50% of your money, now you got to make 100% of your money back just to get even. That's the problem. They're not telling you that. So when you're talking about reasonable yearly returns against your bank, what's reasonable? The best fund managers in the world, the people that are throwing out around billions and billions of dollars, if they get 20%, the best of the best of the best will get 20%. Now Simmons, I think he got 60% a year compounded on his stuff. But he's an outlier. PhD in math and all this other kind of stuff. Is it reasonable that you could get 20% a year compounded when the best in the business has trouble getting 20% a year on their funds? And the answer to that is a simple yes, you can. Because you're not pushing around $2 billion, you're pushing around $20,000. Or maybe you're a $200,000 account. You're not pushing that much around. In relationship to a $6.7 trillion a day Forex market. That liquidity is what makes the Forex market so appealing. So right now, we're in April. It's April 20th, and I'm up 20% for the year against my bank, my risk. So in 4 months, I'm up 20%. Does that mean that I'm going to be up 60% at the end of the year? Well, that's what I'm on target for. However, I can look at my metrics, and this is why I talk a lot about metrics to you folks. You need to know what your metrics are. If I look at my trading metrics, then I can say, why did I get to 20% in 4 months? And my metrics say it should be more. It should be 35%. And why? I look back in my trades, and there's a trade that I took a $5,300 loss on. And another trade I took a $10,000 loss on. Those were unnecessary losses because I was stupid. But because I was stupid, it's dropped me from a 20% gain in 4 months from what could have been a 35 or 40% gain. So I can sit there and say, if the bear wouldn't have shit in the woods, the hunter would have never seen him to shoot him. But the fact of the matter is, I'm 20% up over 4 months. That's where I'm at. All the excuses and all the reasons is all the crying, and it doesn't do any good because I didn't do it. So can I say that you should be able to do, if you study with me, you should be able to do 20% or 40% in 3 months, 10% a month? I can't say that because I don't know how many stupid attacks you're going to have. What I can do is I can show you the mathematics of what you're capable of doing, where you're at in your trading journey. We'll look at your metrics, and I'll show you where you should be at over a given period of time. And if you're not there, that's how I can help you get there. Because if you can show mathematically that it's possible, then why aren't you doing it? Well, it's really simple. The answer for me is very simple when I work with people. And that simple answer is found in talking to them for 15 minutes and looking at their metrics. You got to fix this. So what's possible for you to make? Could you make 80% against your bank, 80% against your total bank? You got $10,000 to spend. Could you end up with $8,000 profit at the end of the year. Sure, why not? I think that's probable. If you have the experience and you know what's going on. But what's likely? Well, your risk of ruin is likely in this market. So somewhere in between, more skewed toward the risk of ruin part than the 80% part, if you have less than a couple of years of trading, what's reasonable for you? Well, if you're not making the equivalent of 20% a year against your money, you probably shouldn't be trading currencies, because at some point you'll do stupid stuff, and those losses will take you down to a 10% or an 8% gain over the year, and you might as well just put your money into index funds and not worry about it. Don't call me, don't contact me expecting that I'm going to teach you some fucking secret sauce that's going to take your little $1,000 account and run that to $30,000 a year so you can have a continuing income of $20,000 or $30,000 a year off that fucking $1,000, because it isn't going to happen. Or you're not going to compound that $1,000 to $20,000. You're not. What should you be able to do with it? The math that I have shows that you should be able to get 20% in a year. And if you're not, then you shouldn't be trading currencies. Trading this small amount. If you were trading $1 billion, you're not going to get 20%. The fact that you're putting money into these markets moves them when you start trading with large numbers. The only place it doesn't change it is the currency market, because it's too big. So you should be able to get 20% on your money, regardless of the size of the bank that you're trading. If you're trading $1 million, it's my, and I don't trade I don't have $1 million to trade. I might be a millionaire, but I don't have it to trade. I am trading a 6-figure account. Is it feasible that you could get 20 or 30% a year against that money? $1 million? Absolutely. $200,000 or $300,000 against $1 million? Absolutely. Because the Forex market is so liquid. Why wouldn't you be able to do that? If you weren't able to do that, you shouldn't be putting your $1 million at risk in trading Forex. But you better sure know what you're doing, because if you don't, the probability of the risk of ruin skewing is going to kiss you in the butt, and man, you're gone. You're gone. So what's reasonable for you to make? Set your goal for 20%. And if you're not doing that on a monthly basis, 1.5% or 1% a month, 2% a month is 24% a year. So if you're not making 2% on your money every month, then don't do Forex trading, because you don't have the skill, you don't have the information, you've got the wrong education, you're trying to do the wrong thing. If you are making 2% a month, go through your transaction register, go through your trading journal, and figure out what it is that you're doing that's giving you that success. Because if you can figure that out, then there's no reason you can't, and I've got the math to show it, that you can't take that to 80, 100% a year. And I've done my trading. I'm trading for a different purpose than you guys are. I'm not trying to pay my light bill or show you how much money I'm making. I don't care. It's for me. I've got my $1 million. I don't need to make $1 million. I don't need to build my wealth. It would be nice to be able to do that, but I can survive just fine if I wasn't even trading Forex. So, and if I lost everything in the Forex account, I'd still be fine. So I've got a different mindset, and I'm not trying to compete with all these gurus on the videos trying to impress you with how much money they're making. I want to prove a process that works, and I have that proven process, and I have been up 80% on my bank risk. Usually that happens, I'm up 80% by around that ninth month of the year, something like that. And then I say, oh man, I could go over 100% this year. I got to do, and that's where I do stupid shit, and it goes back, and I end up at 40 or 50% or something like that. So that's what I do. well, if I can do it, you can do it. And I know how to hang on to my money. It's just that I push it to the center of the table too much. I got up last night at 3 o'clock to catch the London Open, see what was going on. I had an open position going. I had a $4,500 profit, and my profit target was $5,700. I went to bed. I woke up this morning. I got a $2,000 loss on the thing. So I don't care. I got it right as to about where it should have gone. I just missed it by 5 pips, and I would have been out. But that's just me. So you can't look at my percentage gain and say, well, if he can do 80%, I can do 80%. Or he lost 6 figures in 2023 and I'm afraid to trade because he... Please. If you can't take responsibility for yourself, you're in deeper shit than just figuring out how much money you can make or a percentage return on your money that you can make. It's a game. It's great fun. And I understand how serious it is for you guys that have $1,000, $3,000 accounts or $20,000 accounts, $30,000 accounts, and you don't want to lose that money and you're trying to make this work because you need that money to supplement your job income, because you realize that as you get to 40 years old, age discrimination is going to start working against you, or your body's going to be breaking down. This isn't shits and grins that you're trying to do this trading for. Don't listen to the stupid information that you're getting out there in video land, because it's not rational, because nobody's talking about risk or ruin, and that's the most important thing you need to understand how to avoid. If you can understand that, you can trade with no fear, and you can have a lot of fun. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.